So this week we have established the 4-3-2-1 method. You will not be forgiven if you forget the name of this method. I created it out of the sheer simplicity that it entails. But behind this simplicity, there's a lot of work and thinking going into this method. So the 4-3-2-1 refers to the weighting we assign to the four different methods we use in analyzing any risk assets in our universe. By risk assets, I mean equities and crypto primarily. 4 points are awarded if our quantitative signal each day shows a risk-on signal for the asset. So for example, SPY has a risk-on signal today, it gets 4 points. But if it has a risk-off signal, it gets 0 points. So that's where the 4 goes in this method. Then we give a maximum of 3 points to the technical analysis. So the technical analysis has 3 aspects to this: the long-term trend, the short-term trend, and whether it's approaching some sort of resistance level that we expect. So for example, SPY has recovered from the April 7th bottom. I don't see a lower low from here. And I think in the medium term, it would make a new all-time high and move up from there, right? So the medium term, it gets 1 point. Short term has pretty bullish momentum since April. So you can't really say that SPY has not performed well in the past 2 months. It has performed very well. So it gets another point. But now it's approaching a key resistance level at the 1.38 extension of wave 1. So again, here it's prone to pullback. I'm waiting. So therefore, I'm giving it 0. So that's 2 out of 3 points for the technical analysis. Then 2 points on valuation for SPY. We're comparing SPY's attractiveness versus bonds because that's the alternative, risk-free alternative for investors. SPY trades at a forward valuation at 22x versus bond yield, the 10-year bond yield at 4.5%. It's pretty much similar. And that makes it actually unattractive versus owning bonds, which is risk-free, right? I don't expect the US government to default in the next 10 years. If it does, SPY will do much worse. So from that perspective, I would give 0 point to the peer comparison. If it's a Max 7 stock, I'm looking at Apple's valuation versus growth compared to other Max 7 peers. So in that case, Apple would also receive a 0 because Amazon, Meta, and Nvidia are trading at better growth adjusted valuation levels than Apple because Apple is not growing. And then the second point goes to historical valuation. So for historical, we're looking at SPY's valuation versus historical levels in the past 10 years. SPY is trading near 2 standard deviations. That makes it quite unattractive in terms of valuation perspective. The long-term investors must realize that everything you're buying today is for a discounted free cash flow from the future. So buying at an expensive level here automatically makes the future returns more likely to be lower than if you were buying near the mean or below the mean. And finally, the final point goes to seasonality. We're looking at just the 10 days forward, because if we look at 30 days, it might not be that useful that we're looking at this thing every day and every week. So I think 10 days is a happy minimum, let's say. SPY seasonally is weaker in the next 10 days, as June generally is a weak month. Therefore, it doesn't get the seasonality point. Whereas if we're looking at the beginning of July, if today is July 1st and looking for 10 days forward, it's a bullish period, historically speaking. Therefore, it would get that extra point for seasonality. But putting all of this together, 4 points for quantitative, 3 points for technical, 2 points for valuation, 1 point for seasonality, we give assess out of 10 points, SPY gets 6 points. It's not a bad rating because it's at least above 5, because the quantitative signal is saying risk on still. But let's say if the technical side, our human judgment of the technical chart says 0 for the long-term trends and short-term trends, and is just not appealing in terms of valuation either, then it would be a 4 only. despite what the machine thinks. And therefore, that would make it maybe on the unattractive side of owning the stock. And it's obviously up to everyone how you want to use this, whether you want to put, for example, 10 means 100% positioning, 6 means 60%, and 4 means 40%, or it could be more binary, where if this score is above 5, one could consider owning some. If it's below 5, one could just stay out of it. It's up to the individual how they want to use the metric, and we're not giving financial advice here.